welcome to the Ultra High Net Worth Clients Podcast. I'm your host, Chris Broadhead. Today, we have the rare pleasure of talking with an incredible entrepreneur in the M&A space, Willem Westra. Willem, can you introduce yourself and tell us a little bit about you?
Yeah, definitely. And thanks for having me. My name is Willem. I'm, currently in the M&A space where we work with a lot of the world's top private equity firms, and we bring them off-market deals and help facilitate M&A transactions. So in simple terms, we help great private equity firms buy companies. So that's the main focus right now. And then also moving a little bit upstream and starting our own, investment firm where we're actually going to be going out there, acquiring our own companies, selling our own companies, and, doing this for ourselves. So
Hmm.
it's a quick intro on our current focus.
Awesome. Lot to dig in there. That's tip of the iceberg. So, before we, really get into your background and expertise, can you briefly explain the concept of M&As and roll-ups and why these are valuable strategies our audience should consider?
Definitely. Well, for a lot of people, the hardest part of starting a business is actually getting it started, right?
Mm.
Getting those first case studies, getting those first clients, really building it from scratch. So something we're seeing, in today's market is we're seeing entrepreneurs go out there and acquire businesses. Instead of having to start from scratch, hey, maybe it's I have all this experience running, a financial advisory. Instead of starting this from scratch, let me find a promising financial advisory that's already cash flow positive day one, and let me plug in my expertise and really scale this to the next level. And it's interesting because this used to only be reserved for the upper end of the market, but now you're seeing, transactions happen with a lot smaller companies. You're seeing, individual buyers come in, buy smaller companies, already cash flow positive, and really scaling them up with their expertise in whatever industry, they've operated in before.
Mhm. Awesome. Yeah, we've had a couple guests on this one woman in particular. She was like 24 and she had a practice with like 300 million assets under management. And I was like, how did you manage? Like I've had guests who were like 50 who didn't have that much assets under management. I was like, how did you build that, in 2 years since you graduated? She's like, oh, I bought a practice.
Yeah.
I was
So
like, oh, that's a good idea.
because, along with that shift of, more entrepreneurs getting into this, right? Not just private equity firms, but solo entrepreneurs, raising capital, going out and acquiring firms. There's a lot of opportunity right now. Boomers own a lot of companies and they might not necessarily have, glide path to retirement or someone to hand over the business to, you know, uh, presenting a great opportunity for an entrepreneur to go out there and buy that business from them because they have no one to turn it over to.
Hmm. Yeah, absolutely. Awesome. And now that myself and the audience understands a little better about mergers and acquisitions, how did you get into the world of mergers and acquisitions?
Yeah, that's a great question. So started off in the marketing space, and I actually had an investment banking client come to us. Hey, right now to, fund businesses to purchase, we're knocking on doors on not literally, but, sending direct mail, going to a lot of in-person events to source more deals. Can you guys, use your marketing and digital marketing strategies to bring us, more companies that we could acquire? So that's exactly what we did. We filled their pipeline, and they had never seen results like that. So from there, we started consulting a lot of different investment banks, bringing them a lot of deals. And we thought, all right, let's start doing this for ourselves. So that's how I got my foot in the door. And then obviously it's a very sophisticated market where I had no experience in. So, a lot of consulting from mentors, from people in the private equity space, anything I could do to really learn these strategies, as I don't have that background that a lot of people have at private equity firms or investment banks.
Hmm. Awesome. Yeah, I have, obviously I run a marketing firm currently, and just working with so many different financial advisors. One, I'm like, should I also have a financial advisor practice? And then two, it's like, some firms who like have a niche, like a target customer. I'm just like, oh my gosh, like it is so much easier to find leads for you because you work with one specific person. We can make the content and the marketing copy like so much more specific and interesting to them. So it really, like, to your point, like that is such a benefit to work with all these different companies and be like, oh my gosh, actually this is what I want to do even more.
Yeah, definitely. I think one of the greatest skills you can have is being able to fill a pipe. If you can fill the pipeline, figure out deliverability, there really is no cap to what business you can start and what industry you can get into. So actually, one thing we see a lot in M&A is a lot of these different companies, they can get to the 10 million point in annual revenue, and they can't scale past that. Why can't they? They don't have that ability to fill that pipeline. So a lot of different firms, they have that ability. They have those marketing and sales systems. So they'll go out, purchase those firms that are hitting those big revenue numbers. And then by simply plugging in those marketing systems, they can really take it to the next level.
Hmm. Nice, nice. So, it sounded like you guys started, uh, with your ability to fill a pipeline, for private equity firms. What what strategies were you using then, and what strategies are you using now to find, you know, off-market deals or any deals really?
Yeah, so to give a quick background on what off market means, both for buyers and sellers, kind of a traditional way to buy a business. It's going to be publicly listed somewhere where everyone can bid on it and, the deepest pockets win. A lot of times that means, buyers are getting illogical and, can really price you out of a transaction. So what private equity firms really like to do is buy off-market deals. What is that? It means that, you're not listed anywhere. You might not have even thought about selling before. And because of that, you have a lot less competition acquiring this company. You can get in at a better price. And then on the seller side, right? Why would you want to sell off market instead of, starting a bidding war? Well, imagine if you didn't sell your company, right? You've been publicly listed. A lot of people are going to view that in a negative way, and you might not ever sell. It's also not very confidential. What happens if your team finds out? So it can be a complete mess. So we saw that gap in the market of, I think there's a better way to do it than, just going through this bidding process. So how we do this for ourselves is, when we approach a seller, we typically do that by email. Why? Because, sellers, they're operating businesses, they're on email a lot. We're doing our research and we're leading with, hey, we have a buyer right now who's lined up, and it would, make a lot of sense because of the XYZ reasons. So a big competitive advantage for us is we're actually starting with buyers opposed to taking the traditional route of, hey, Mr. Seller, I think I could sell your company. Just pay me all these upfront fees. We'll publicly list you. And, if you don't sell, well, tough luck. And now everyone knows you weren't able to sell.
Okay. So is it like a lot of just cold email campaigns to get on these folks' radar, these business owners' radar?
Yeah, it's doing anything we can to get in front of someone who would want to sell their business. So
Mhm.
we use a lot of referrals, partnerships with incubators, partnerships with private equity companies who might want to exit one of their portfolio companies, along with, that hyper relevant, going up to the business owner and asking them directly if they would entertain a sale. Because the other thing about off market deals is if you have a great business that's cash flowing, why would you ever want to sell it? So, a lot of people here, it's, we want to buy your company, but if you have a great company, you might not want to sell it, which we see most times. So it's really being able to make that compelling argument of why you would even entertain, selling to someone else.
Hmm. How do you convince a successful business owner to sell?
hmm So we typically see a couple things with someone wanting to sell. Number one is they want to retire. They have no one to hand it off to. Number two, especially in the RIA space, is hey, this owner came from a big firm and they wanted to start their own thing. And they quickly realize how hard it is to run your own firm. And they're looking, to kind of cash out, get out of there. Number three would be, if you're starting your own firm, you're most likely entrepreneurial and you might have that next thing you want to put your focus into. You built up your company to a certain level. Now you're looking for that next venture. And then finally, the fourth one is, a strategic plan. So let's say you're a business owner and you've got your company to a certain level. Well, maybe you're looking for that partner to really deploy a lot of capital to get you in front of other strategic partners to really take your company to the next level. So that's typically the reasons we see that someone would want to sell.
Mhm. Okay, got it. And do you focus on any specific industries or verticals, or do you have a specific niche that WW Capital focuses on?
Yeah. So for lack of a better term, we like internet-based businesses. So SaaS companies, tech-enabled services, marketing agencies, e-commerce. If we were to get even more specific in there, I love marketing firms. Um,
Hmm.
because first of all, I really understand them well. And second of all, if you think about, a marketing firm, well, they have that reoccurring revenue. Most likely they have deliverables down for delivering for a client. So buyers also really appreciate those companies. If, we get involved with manufacturing where a lot of our buyers are, well, there's a lot of moving parts. There's real estate, there's equipment, and I just like, these internet-based businesses because you can really move fast on a transaction because there's a little bit less moving parts.
Hmm. Got it. And so their kind of minimum revenue is 10 mil a year up to 100 million.
Yeah. So, this term is somewhat new. It's called the lower middle market. Again, traditionally, M&A was way upstream, where you had a few firms acquiring, huge companies, taking them public. Now there's a new term called the lower middle market. So I'd say 5 million in annual revenue to 100 million. And right there, you see a lot of, different manifestations of M&A. So, that one woman you spoke about earlier who acquired the company. You have entrepreneurs acquiring companies, still the private equity players, and then very strategic roll-ups as well.
Okay, nice. Yeah, so I'm glad you brought up roll-ups. So, we have a couple clients right now, one in the advisor space and one in the commercial paving space, of all things. And they're both engaged in a roll-up. And both of them are not trying to purchase the entire companies that they're trying to roll up. They're purchasing like 70% or I think like 10 to 80% of the companies and then rolling them all up, and then the sum is bigger than its parts. Do you guys engage in roll-ups as well?
Yeah. So are they trying to acquire the companies or they are being acquired?
So the commercial paving company is trying to acquire the companies, and the financial advisor, uh, he's working with a private equity firm that, uh, I guess he's one of the firms that's being rolled up, and he's trying to roll up companies into his company to make his portion of the roll up as big as possible.
Yeah, definitely.
Yeah.
So it is a really popular strategy. And, the basis of starting with, your platform investment. This platform investment is the company you're going to build around. So, typically it's the largest, and we're going to go out and acquire a lot of similar companies to roll them up into this larger entity. Why? Well, better diversification. You're going to have a higher multiple if you try to sell. You're going to be more valuable. You can have strategic cross sells. You already have this proven system for, scaling these companies. So we definitely see that's, a very popular thing, especially in the financial advisor space. Consolidation, roll-ups are a huge M&A play within, the RIA space.
Okay, you mentioned multiples. Is there seems to be some magic step points where you're like, oh, for no particular reason other than your all your revenues combined equal X amount. Now you're worth 10 times that.
Yeah.
Is there, can you, is there, I'm sure it's like vertical, specific, but are there any general rules of thumb where you hit a certain total yearly revenue of all the companies and then your multiple goes up?
Yeah, so, at least what I've seen with a lot of financial advisories is it goes by AUM. But again, that's not really our space of specialty. So
Mhm.
across industries, we see 4 million EBITDA being a great place to explore, a transaction. Why? Because as an entrepreneur, as a business owner, you might have the expertise to get it to that level, but it takes a whole new expertise, to take it to the next level. So at that 4 or 5 million, spots, definitely tons of potential to sell for a high multiple and to have that strategic fit where, the buyer can take it to the next level.
Mhm.
And one other thing to mention is you spoke about, acquisitions where it's not a full acquisition, it's just, let's say, 70% of the company, 80% of the company. We see that a lot too in today's market. And, the reason being is, hey, if you have a great CEO who brought the company to 4 million EBITDA, maybe it makes sense and they want to keep, on the company to take to the next level. And, you sell a portion of the company to get that expertise, to get that capital, that strategic play and stay on and take it to the next level.
Mhm. Okay, got it. So, obviously the M&A space is not my expertise. Talking to my clients like piqued my interest, so I watched a bunch of YouTube videos of people who, who knows how much they actually know about what they're talking about. But it seems to me that, the main kind of persuasive argument here is, hey, like, you have 100 million assets under management. Your company is on paper set to make like 1% of that a year, so $1 million a year. Your EBITDA is like, 10 to 20%. So your company is worth 2 to 3x your EBITDA. Your company is worth 600K on the best possible day, right?
Yeah.
But it's like if you just roll up with a bunch of companies and then all of a sudden your EBITDA is, 4 million, it, essentially, what's that like, 8x, then, your multiple goes from 2 to 3x to like 10x, right?
Definitely.
So is
Yeah.
is it is it that simple? Is it basically just like, your EBITDA is not large enough. Join a group so that all of your EBITDAs together are large enough, and then your multiple goes from 3 to 10. Is it? I'm sure I'm missing a ton, but is it essentially that simple?
In theory, it is, but obviously getting to that point is a lot easier said than done.
Hmm.
Right. If you think about it, first of all, you have that larger number. And second of all, you have that diversification now. If one firm is struggling, well, your risk is diversified across multiple firms. You could have 100 clients. Now you can upsell them with other firms. You can cross sell them. So it does definitely make you a more valuable company, but, you know, uh, it is harder pulling that off than it sounds.
Yeah. So, I mean, if it's strictly just advisors and there's not a lot of new services offered. It's literally everyone offers the same service, but you're just it's just like a EBITDA expansion play, would that still deliver a 10x multiple once you hit like that 4 million EBITDA, or is it very dependent on like, oh, we rolled up with like tax lawyers and CPA and yeah, and CPAs as well to like to fill out our service offering?
Yeah, it's definitely hard giving you like a firm valuation of this is what it would be worth. But yeah, valuation definitely would increase. But now it's all about, showing proof of concept. So, hey, if we roll up these companies, we actually have to deliver and show, future buyers that we can deliver on this.
Hmm.
Um, but yeah, in theory, valuation should definitely go up if that EBITDA is increased.
Hmm. But but I'm talking like the multiple, like I'm so intrigued with this just magic multiple that
Yeah.
seems to kick in once you reach a certain EBITDA, and I'm just like like is it really that simple? Like we just have to say that we're all one company and then we're worth 10x instead of 3?
Yeah. So, I can give it from, a company that we just worked to sell.
Yeah.
So the marketing space, right? And, if a company right now in today's market where, interest is high, private equity firms really want to acquire more proven companies. So, for example, this company had 5 million EBITDA. They were able to get offers for a 10x multiple, which is really high. If we were to take that same company and give them, a 2 million EBITDA, no way they would get as high of a multiple. Why is that? Because they're more proven, right? If you're a buyer, this company has proven itself. It's 5 million EBITDA. This is a really solid purchase. If the interest is really high and I'm going to buy, a less proven, shaky business, well, I don't want to buy it for a high multiple. And if there are so many opportunities out there of great, 5 million EBITDA businesses, why do I want to pay a premium multiple on a smaller, less proven business? So yeah, one way that a lot of buyers will associate that is with the EBITDA. And one way higher EBITDA is to do that roll up strategy.
Hmm. Okay. And our private equity firms, they're obviously aware of this strategy. So, they might be like, this is just a Frankenstein, you just duct taped a bunch of companies together, like we're not falling for it.
Uh, yeah, they're definitely great buyers. But yeah, if the strategy is executed, if it's, a
Yeah.
seamless, they'll definitely pay a premium for that.
Mhm. Okay. Got it. And then so getting back to your main focus is uh marketing companies. Is there a specific form of marketing for these companies like SEO, paid ads, content creation that you focus on, or is it kind of across the board?
Broadly speaking, across the board.
Hmm.
Thing that's interesting is, in a bad economy, right? Companies who are using marketing agencies might, reduce their budget, take that marketing agency off. So, a more stable marketing agency is definitely going to be one that, brings a client ROI because, in that bad economy, they're not going to look to cut that off, especially if they're giving your company an ROI. So, on focused marketing companies typically opposed to, a creative agency. However, creative agencies are still something we could sell.
Hmm. Got it. So it's yeah, the provable ROI marketing companies, the holy grail of marketing companies, if you will.
Or in a very defensible market. So, for example, we were selling a company in cybersecurity. That's a pretty proven market. If it's a bad economy, right, they're not going to get hit as hard. Therefore, they'll probably still have that budget to pay their marketing agencies. So, defensible market helps as well.
Hmm. Okay, awesome. Um, and it, and the 5 million to 100 million yearly revenue is applies to the marketing markets
Well,
as well.
definitely. But one thing to note is like for these strategic add-ons, companies will definitely go downstream. So We see companies who sometimes don't even have a minimum on businesses that they want to purchase. However, for us, we definitely like putting our focus on, the $5 to $100 million businesses.
Mhm. Okay, cool. And when you're purchasing these companies, is the goal to roll them up with another group of companies?
Mhm.
That's always the goal.
Yeah, so it depends on the size too, right? So if it's a large company, let's say 10 million EBITDA, well, you can build the add-ons around that. That could be your platform investment off of which we buy, off of which we build, right?
Mhm.
You know, it's a super proven business. It probably has a lot of customers, probably has a great team. All right, we can build up around that. Whereas, let's say a $5 million business, well, that's most likely going to be added to the platform company as a roll up for it.
Mhm. Okay, got it. And then, you know, when you are considering an acquisition, how do you analyze rates and just determine if this would be a good acquisition and it would be a good fit with the kind of foundational company you're combining it with?
Yeah, it comes down to a couple things. First of all, client base, right? We've had companies that are doing millions of dollars in annual revenue, but they just have three enterprise clients. And as tough as it is to say, that's not a real business because if you lose those three customers, you got nothing. So a diverse and big customer base is definitely one thing. Number two, the CEO is removed from operations, right? This business can function whether or not you come to work. Right? It's a machine that works itself. Typically, another thing is reoccurring revenue or as close as possible to that. That's why SaaS businesses have huge multiples because, it fulfills the service itself and it has that reoccurring revenue. So if you're project based, that multiples most likely going to be lower. Um, Having sales and marketing in place so that it really is a repeatable business that is proven. Hey, we already know how to sell and how to market our company. Those things all go a very far way.
Okay. Is there any focus put on like a culture fit?
Mhm. That's a big thing. Especially when we worked with some firms that wanted to acquire financial advisories. That was one thing that these buyers were really looking to put. Hey, we're going to take care of your team, and we're going to take care of your customers and continue that focus, though, client excellence. Um, if the firm is doing a control investment, so hey, we're taking 80% of your company, but we want the CEO to stay on and really build this thing with us, 100%. There has to be a great culture fit, and the CEO has to, get along well with the buyers and, their plan for the company.
Got it. And I would imagine that this can be a bit uh, jolting to the employees. Are there specific strategies you all put in place to kind of put the you know super high value employees at ease, put all the employees at ease?
So that's typically why companies like selling off market. If your company is being publicly listed, and
Mm,
your employees can see it being bidded on, well, there's a good chance they're going
I
to look
like peace.
new jobs. And sadly, one strategy is a lot of times, private equity firms cutting off, some employees. Um, but at the same time, that can be a misconception that private equity just want to come in, completely cut off all of your current employees. And there are those, firms who position themselves as, hey, we have the best interest for what you've built, and we're going to take care of your team. So that is definitely something that a seller should be asking, a buyer if they really do care about their team and want to see them taken care of.
Mhm. Okay, got it. Yeah. All of the like that's how I love to do research on stuff. I just like make a YouTube list and then a video list, playlist, and then I'll just like watch or listen to them, for the next couple days or weeks. And it seemed like, there was a ton of great value, like the nuts and bolts of it. But at the end of the day, every single one of them was like, if it's not a good culture fit, it's going to explode.
Mm,
Like
100.
that is a pass fail.
Especially if the CEO is staying on, right? Like, you're
Yeah.
running the ship and, you still are, but now you're being told what to do by someone who just purchased your company and owns the majority of it. It's going to end badly if, you can't get along and there is not that cultural fit.
Yeah, so I'm curious, like my cousin is an industrial psychologist and she literally like does that for a living. She helps companies like buy into the top hire or recruit or whatever. And she has like an insane track record, like like over a 95% retention rate and like, it's like, damn, her name's Julie, like, damn, Julie, how'd you find this person? Or like, how'd you know they were gonna be like such a perfect fit? And I'm reading this and watching these videos, learning all this, and I'm like, man, I wonder if there's like a business that like analyzes acquisitions like
Uh,
pre-acquisition and just for like culture fit, just to like, instead of one person, it's like an entire business. And I asked ChatGPT and it spit out like three kind of generic ones. Like I think Deloitte was one. It was like Deloitte, McKinsey and company. I was like, well, these companies do a ton of stuff. I don't know if they specialize in that. Is that something you think the M&A space would be interested in, like that service?
100%. I think that could be
Yeah.
for it. And that's one of the reasons why buyers like to only buy, not a full acquisition, but, a portion of the business. Keep the founder or owner on, right? So that the team stays on. If the founder's out, say we're bringing in a new XYZ, right? You might have some teammates leave and follow them.
Yeah, yeah. Awesome. Awesome. Okay, cool. Oh, I think those hmm. Yeah, I always write down a ton of questions because you're sharing so much great info. Um, awesome. So do you I know you're a young man. I you're you're doing a lot of great stuff. Do you have a financial advisor?
Nope, but it is on my list for this year, actually.
Okay. Great, great. So we'll have his contact info in the in the show. That's cool. Why are you in the market for one?
For one, I don't know. As an entrepreneur, I think a lot of times you think, your money is best put into your business, just, investing back into it. And, I've definitely invested a lot into the businesses and now looking to, put those investments elsewhere. So
Hmm.
that's why it's a great time to consider.
Yeah, awesome. Do you have any kind of parameters that in place to help you in your selection process?
I do not. No.
Yeah, cool. It, yeah, awesome. Okay, well there's a lot of great financial advisors out there, so uh, you got the world is your oyster, my friend.
Definitely.
Um, cool. All right, well this is awesome, man. You are a wealth of knowledge. But I know you're a busy man. I want to respect your time. So I'll just ask a couple more questions and then I will set you free, good sir. Um, so can you share some of the memorable deals you've worked on and what you learned from them?
So just had one great one. They were a marketing agency. It's actually the one I mentioned before. They were doing 5 million in EBITDA and they wanted a 10x multiple. We candidly didn't think we'd be able to get them one. And, because of that, delayed us a bit in, getting this out to our buyers. We got them that deal. And then, that day they had already received an LOI, which they signed. So it definitely taught me the, what's the word? The importance of being fast with this, right? If it's market deal, you have everyone reaching out to them, and it's really important to move with a lot of speed, especially for those great companies.
Wow. What was like the deciding factor for them to like achieve the 10x multiple?
Was just built to sell. So, the
Uh,
found just built this thing to sell. They had exited before, and because of that, they had all those things in place that we had mentioned. They had a very diverse customer base. Operations ran itself. Like someone could literally step in this company day one, have great cash flow, and wouldn't even have to worry about operation because it was a well-oiled machine that really ran itself.
mm, nice. Yeah, I love that you said built to sell. I don't know if you're familiar with that book of the same title, but I read that a couple years ago and it just like completely redefined, my definition of how to make a business. And it's basically like, can run itself. Uh,
And I think
uh,
that's really hard for entrepreneurs to do, which is something I'm bad at.
yeah.
Self-operate and letting it run. You just make a few decisions per day. So as I start that investment firm and that first portfolio company with my business partner, that's exactly how we're trying to build it. Built to sell, runs itself. We're pretty removed from operations.
Awesome. Awesome. Um, what else I got? So, you're super tuned into the marketing space. Are there any kind of exciting or hot new marketing strategies or tools that you're seeing these, you know, built to sell companies using?
Mhm. Nothing off the top of my head. I definitely see one model being white label. So, let's say marketing agency X has a ton of companies. If I'm marketing agency Z, I would approach them and say, hey, we can, take on some of your customers. They won't even know that we're fulfilling for this amount. So you're kind of tapping into someone's already existing customer base. Seeing a lot of success from in-person events, which is something I'm adding to my strategy too. So, going in person, shaking hands, winning those big clients. And then number three is, I really lean into direct outreach, directly approaching a business owner via email, via the phones, via LinkedIn. There's tons of new regulations being put in place for email. So it will be interesting to see how that space, uh, you know, advances. As right now, email is almost unusable because, your email can just be filled with spam. So it'll be interesting because a lot of companies just rely on email to get in front of, other businesses. So I think it is going to have to be adopting that, multi-channel approach.
Yeah. Yeah, we're incorporating a lot of SMS marketing now as
Um,
well. You know,
is-
you you
and
can't you can't cold SMS people. Uh, like you can with email, but they opt into something and then it's like a very effective like kind of second punch, second reminder.
Yeah, one thing so we want to do a lot of with the portfolio company that we're building in the PR space and super outdated industry. So we really want to modernize it, a lot of online media, including a lot of podcasts. So that's going to be a big strategy, and I'll have to pick your brain after this call on pod.
Yeah, yeah, awesome. It's hard to sell your podcast if you host it.
Yeah.
Yeah, awesome. And then uh do you see any exciting innovations or technology playing a role in the future of M&A transactions?
Um, I definitely do. I'm a little out of tap with, stuff that they have in place for analyzing deals, underwriting deals, due diligence. But there's a lot of tech there. On the data side for finding these off-market companies, there's a lot of tech, but it's always going to be hindered by, there's a lack of information on private companies. You can't explicitly tell how much revenue or, EBITDA that private company is doing, especially in that 10 million range. So I think a lot of tech is going to be built there, with helping people have a better understanding so that you're not approaching XYZ company having no idea if they are, a very profitable company or not.
Awesome. Awesome. And yeah, all right. Well, we're coming towards the end of our time. I am, obviously you and me met in Barcelona. We're both digital nomads or whatever. You also live in Cape Town, South Africa, correct?
So Cape Town, Barcelona, and then New York.
Okay, cool. How did you choose Cape Town?
Cape Town, yeah. So I had a friend who told me check it out. In New York, winter's not fun in New York. It's miserable.
No.
Ready to get out of there. And he recommended Cape Town. I got there. It blew my mind. I've never been anywhere like that. You hear Africa, you hear, underdeveloped country, but in Cape Town in specific, amazing place. And can't recommend it enough.
Hmm. What do you like about it?
Uh-huh. So what's interesting about it is you have a city, you have a beach, and you have mountains.
Hmm.
In 10 minutes from each
Oh
other.
wow. Okay. Similar to Barcelona.
Similar to Barcelona, correct. I would say
Okay.
a little bit more nature, but
Mm.
somewhat of a similar vibe. You met a lot of people from Cape Town, and I think there's a lot of overlap between people from Cape Town coming to Barcelona and a lot of people from Barcelona spending part of the year in Cape Town.
Okay. You could just do a perpetual summer.
Exactly. Just cancel winter.
Yeah. That's great. Is the tax situation pretty good down there?
I'm still paying New York taxes. Oh, have to get all sorted out.
Yeah. Awesome. What about the visa? Are they pretty easy to work with to stay down there?
So you can be there for 90 days straight. You have to leave the country to your country of origin, and then you can come back in. So you can do infinite times every 3 months, but it's a pain, right? Because South Africa is so far away from literally.
Mhm.
Um,
Yeah. You're like, where's the closest US place to South Africa? It's like Puerto
16
Rico or something.
hours.
Dang, 16 hours? Man, that's brutal. That's awesome. So do you do the majority of your time in Cape Town and then a
Um,
little bit Barcelona, a little bit New York?
I'd say so this year. Last year is more skewed to New York. And then this year it's gonna be more skewed to Cape Town. I personally, love the time zone difference. You have it here too in Barcelona, where you can wake up online before anyone else, before any clients, before any team members, then
It's the
7
best.
to work. Or if you just wanted to start at the regular time, you have your entire morning until 3 p.m. to yourself. So
Yeah.
for the time zone, I thought that was going to be a hard thing, but that's also one thing that really keeps me in Barcelona, in Cape Town, and then going to New York again in a couple months. Just do a lot of in-person business, meet with some firms, shake some hands.
Awesome. Awesome. Yeah, that might be my single favorite part about moving here. It's just like I wake up, I have no calls, I have no texts, I have no emails because no one is awake yet.
Definitely, very
Yeah.
nice,
Yeah. Awesome, man.
and a lot
Well,
of
this was
there too, and a picking up city in terms of business.
yeah, yeah, absolutely. Willem, well, this was awesome, man. I could definitely ask you questions for the rest of the afternoon, but I will respect your time. My final question, and it's an open-ended question. You can take it any direction you would like. It is, what are you working towards?
Yeah, I'm definitely working towards being an investor. rather than an entrepreneur, in the sense that, how I want my businesses to be is I want to be removed from operations. I want to build great teams with great people who, really keep the machine going. And that's my biggest goal right now is, moving away from, the entrepreneur who is putting in their time, trading lots of their time, to an investor who really builds teams, builds sustainable products, and is removed from those operations.
Awesome. Awesome. It sounds like you are well on your way to that, my friend. Very, very excited to continue watching your journey.
Thanks a lot.
Yeah. And where can our audience find out more about you?
Yeah, so my LinkedIn is Willem Westra, or you can reach out directly to me at Willem Westra at www.capitalgroup.com. Either way, I'll make sure to respond.
Awesome. Awesome. Well, Willem, thank you so much for taking the time to talk to me and my audience today. This was freaking awesome.
Yeah, thanks for having me.
Yeah. And to all our listeners out there, keep on growing, everybody. See ya.